Walt, while you were very busy paying attention to earnings calls, I was on the road in Silicon Valley to find out what was going on. And when I'm out there, lo and behold, Waymo makes an announcement. They're going to three more markets. Elon got his pay package approved with a 75% vote. And in the Valley, I learned there's a growing rebellion against Nvidia. And most importantly, the drama from the Uber Waymo saga continues, but let's start with the expansion of Waymo to three new markets. What do you make of that? Is three the trifecta?
That's what it seems like, Grayson. It seems like whenever we announce things, we don't get individual markets anymore. They drop three of them on us. But the other thing that I've been noticing in these Waymo announcements is no partners. I mean, obviously, Waymo has a strategy of not building their own service centers and charging, and in this case, nothing was announced. Obviously, the big question is where's Uber? Our title last week about the divorce definitely got a lot of feedback and got a lot of input for sure. But Uber wasn't there. Like, what do you think the strategy is in general? Whether it's Uber or someone else, like the timeline on when they're going to announce partners for these markets, or is it possible that Waymo is going to do some of this stuff on their own?
I don't see the three markets as our title generated quite the bit of buzz last week. Do not see any of these markets becoming Uber markets. I do see perhaps a handful, say two of them becoming partner markets. Who those partners are, unsure at this point. But is this a growing sign to the market that Waymo's going to announce a market and then negotiate partners? Is that something that we're looking at if they do indeed bring partners on at a later date?
I mean, I think Uber's argument on this would be like, that's not really different than what's happened historically. Like, even if you look at Austin, that wasn't necessarily an Uber market from the get-go. I think Waymo had done a fair amount of work in that market before bringing in Uber. So if you're Uber, you might be holding out hope, although we'll get to this later, but I think feels like there's a tone change at Uber in general when they talk about Waymo.
I think tone change is an understatement. All you have to do is listen to the Q3 earnings call to understand that. But if you look at the historical markets that Uber and Waymo have gone, there's a common denominator. When Waymo announces the market through the press release on the Waymo blog, they announced exclusively with Uber. They did it in Austin and they did it in Atlanta. That was at the time of the announcement of the market. So I'm just looking at patterns here, and I don't see that pattern here.
Sure, if you just look at the announcement of the market, but I think the reality is that Waymo had been doing work in Austin prior to, partnering with Uber and then announcing that market together. I think we've heard that from both sides.
Work? Yes. If you want to put it in quotes, work, yes. Waymo was there testing. They were testing there for years. That was publicly known. And let's not forget, the Austin market was the first time an individual ever rode in a driverless car in the United States without a steering wheel or pedals. It was the blind gentleman that was done in the Waymo Firefly car. Waymo has a long history of being in Austin. So work was being done, but market was not announced.
Sure. So we'll see what happens with these. I guess my point is, and maybe these announcements are happening a little bit earlier than the Austin announcement was happening. Obviously, they're happening three at a time. I certainly don't think you're making the argument that since these markets were announced without a partner, that there will never be a partner. I think we both agree, and correct me if I'm wrong, that there will be a partner. So to the extent that that decision hasn't been made, Uber might be the guy. But the question, though, is when you say Uber is going to be the partner, but there's two elements of a partnership that Waymo is going to look for in the market. Who's going to service and charge these cars, as well as perhaps doing a platform, whether they're going to choose Waymo One or putting themselves on Uber or Lyft. So, those things, they don't necessarily obviously need both, but they certainly need that, that servicing component. And in Uber's case, they hand that off to someone else. And in Lyft's case, at least initially, and this is going to be a part of their strategy, it's part of FlexDrive. And they're making investments as it relates to that.
Got to get hip, Walt. Just like the Facebook became Facebook, Waymo One became Waymo. They're really pushing on that verb there. You're right about the charging infrastructure, the maintenance infrastructure, the fleet management, the fleet operations, the below the line as what I call it. And then there's the real estate element. Alphabet has a very large real estate division. They know how to buy real estate, they know how to manage real estate. Why don't they make a division inside of Alphabet Real Estate just to manage these depots and manage operations and bring it all in-house and I would say limit their risk since they have experience?
I mean, it's a good question. And I think, as Waymo's management continues to deepen, Maybe you bring in people that can recognize those types of opportunities, and maybe that strategy changes. But in the near term, they've looked to partner. And if you're Lyft, let's just review what they're doing in Nashville, spending $10 to $15 million of a capital investment in Nashville, and they're going to own the depot. I'm not sure in Austin, like who owns the depot in Austin. And this is the one that you and I visited. We have video of this. It was formerly called Move. They're now called a Waymo. Like, who owns that in that relationship? Do we know?
We don't know who owns it, but let's just put the cards on the table. The potential owners could be a real estate company that they're leasing it to, some division inside of Alphabet, a Waymo, Uber. We don't know. But here's the most clever thing that we do know. It's directly across the street from the Tesla crash station. I don't know what that's supposed to mean, but that's a little interesting.
I do remember that as well, Grayson. So the interesting thing about the ownership is like you have Dara K from Uber on their call talking about REITs, but also referencing like REITs in the cars. And just as a point of reference, like cars are a movable asset. When I've talked about this in the past, I've noted that and saying that is not a readable asset. Hopefully there might be tax changes in the future to do it. So if you want to REIT your investment in the infrastructure, you kind of need to own the land, I think, and the charging stations. And I don't believe that's the case with Uber. Now let's take Lyft as an example. They will own this asset, right? And FlexDrive is an important element of this. In fact, Lyft goes one step further on their earnings call. They started talking about 90% uptime. And they think Lyft is, and they believe that they're going to get paid for that. Talk to us about your view on the importance of uptime and what that means.
Uptime's the most critical element, but how can you, outside of contractual agreements, outside of playbooks, how do you guarantee uptime? Because there's a lot of elements that go into making an AV work. There's a supply chain. When we were in Austin, you and I had long conversations about this. When we saw the Waymo going, 15 miles an hour, 12 miles an hour around the depot trying to calibrate, you have sensor supply chain issues. You have tariff issues. So the 90%, I would like to see some clarity on how you do that, because unless you have a backlog of supply in that warehouse, you have talent that knows how to move all the componentry, and you have redundant power, I'm unsure how you're going to get 90%, because let's not forget, 2032, Nashville runs out of power if they don't continue to build up the energy grid.
You forgot one of the most important elements there, Grayson, which is the software to manage the fleet, right? But but you hit on also very important elements. Management expertise. You don't have what was in fact with Waymo, a foreign company inserting them into the US and say, hey, go figure out how to build this asset there, right? This is Lyft with FlexDrive, who is experienced in this. They have a software element to make sure that the cars are coming in there. You and I viewed that of Waymo. I viewed Transdev in Los Angeles. I think there was another one in Los Angeles. These don't feel like optimized service centers. You could argue it's early, right? But if you optimize this and you run it, and there's other companies out there that I think are working on that software, that can be a critical advantage. Let's make this clear. Lyft and Uber, when they want to partner with third parties, will say, hey, use our software. But the question is, like, if you are a fleet manager, do you want to be that tied into Uber where they're providing you the demand for your rides and how you're going to manage your cars, and you're going to get that tied in to Uber's ecosystem? Not necessarily the ideal situation. So I think there is, again, in this service component, something that, if run properly, can be a business on its own. And I think, Lyft, has some foresight in trying to build this up. Obviously early, right? Only in Nashville right now.
2 points to touch on. One future, one historical. The sensors are going to change on these vehicles. We see that Waymo is rolling out the Zeekrs and at some point the Hyundai. So you're going to need expertise across a variety of vehicles. And if they decide to swap out the sensors, you're going to need expertise on those. And that's the future statement. The historical statement is when Transdev, who I've been very fortunate to know several of their CEOs over the years, they hosted me at Babcock Ranch in Florida, where they were running a deployment of shuttles and Sid Kitson's Babcock Ranch. Here's the thing, Walt. It ran on Transdev software. Transdev managed the deployment. I know it was shells, it wasn't Robotaxi, but Transdev built the entire operational structure, the service center, and the software to manage it. And Transdev is probably one of the most important companies in autonomy today that doesn't get enough credit because their expertise is very, very deep, and they've been in this since the beginning.
And I think there are other fleet managers out there that are building their own software. They want to have it separate. They don't want to have to rely on Uber or Waymo or whoever. You want to bring a diversity of either platforms or cars, depending on who you are. Like, again, if you're the fleet manager that's out there, let's go back to Lyft as kind of one of those players in the market. And if we've already established, I think that, Waymo has announced these markets. Maybe they've even started with a market. Let's say they've started with Avis. Things aren't going well. They dial up, Lyft and say, hey, Avis isn't going right. Let's unplug them. We're going to plug you guys in. We're going to only do the Waymo the Waymo app. We're not going to put it on the Lyft. I think if Lyft is presented with that opportunity, they go for it. They do it. They say, yes, we're going to build FlexDrive as its own thing. And then over time, you're going to see the sense of also plugging those Waymos into our platform, because it's not only what we're doing with Nashville, but we'll be your partner because we built such a good, service center. If FlexDrive can get there, how do you envision that rolling out? Like, is that something that could happen? What do you know about what's going on with Avis as an example?
If FlexDrive can do that, that becomes a strategic asset for Lyft. Let's call a spade there. But if you want to call in the environment of partnerships, and if that's what you want to use the term partnerships or marriage or anytime you want to use, it becomes very difficult to unwind these things. So here's a hypothetical. Alphabet has an extremely strong balance sheet. What if they just set up to call it Waymo Holdings or whatever term you want to use, and they said, okay, we're going to go buy the real estate. We're going to own it. We're going to own all these assets. Don't worry about it. We're going to hold it on our balance sheet. And they pick the partner. And if something happens with that partnership, they can easily move it over because they own the assets. It wasn't I'll use the term, it wasn't in a joint checking account. It was all theirs, and they can easily move it. So that's going to be something to watch of who owns the assets, because it gives them the ability to move. As it relates to Avis, unsure. It's been very quiet. We haven't heard much. And a sign to look at, in my opinion, if it was going gangbusters, I think you would have seen an announcement. Gil West is now running Hertz, former COO of Cruise. You would have saw something there. Enterprise, that's the Enterprise Mobility Division. You would have saw something there. They invested in Voyage in the back of the days. The peers in Sixt out of Europe, the peers in the rental car industry have been very, very quiet. Is that a telling sign? Do they know something, perhaps?
Yeah, I don't know. I just think this market is wide open. Obviously, you and I talk about it a lot. We care about it a lot. The flip side of your argument of those being connected and hard to disconnect is the opposite, which is, again, getting back to Austin. Let's just assume, for sake of argument, I don't know whether this is true or not, that Uber doesn't own that real estate. Maybe Vomo doesn't even own the real estate because Uber owns a stake in Vomo. It's easier then for Waymo to disconnect and shift to a Waymo market as opposed to an Uber market. This goes back to why I think this is an important element of the strategy, and then outsourcing it and not owning it, reduces your strategic value to the autonomy partners. Not to mention gives up these retreatments that you can get for it. Now, if you're Uber, their attitude has been like, well, we're Uber. Like, we are the market. So like, they should be coming to us. We shouldn't be coming to them, right? The messaging has been like, well, the supply is not there until 2028. And by the way, like, I've been the biggest, proponent or critic, I guess, of that in terms of Waymo. Like, you need supply. With that said, like, you have a lot of markets that are going to get 100 cars, 200 cars, 300 that are going to start showing up in Uber's results. Uber's was already a little soft. Uber Eats kind of helped the numbers. Once you start seeing Waymo connect to airports and market by market, it's going to show up in those numbers, even though they may not have tens of thousands of cars on the market in 2026. But I think we might be stepping in a situation where just Uber views their existing power in the market, I think, in a way that they might be leaving something on the table as it relates to the servicing of the cars and how that cements their relationship with autonomy fleets.
That's a very valid point, because you're right. They're an investor in Novomo, they're an investor in Move, but they don't own their own strategic asset as Lyft has FlexDrive. You're right about airports. When autonomy scales to airports, you are, and this is a prediction, and I'm going to go on the record with this, you will start to see a decline in Uber and Lyft rides to and from airports. And I'll tell you a funny aside here. I was at the SFO airport this week. I was terrified that I was going to get stranded because all the flight cancellations, but I made it in and out of SFO, and I lived to tell the story. So I get there like any other normal person. Okay, ride help. No, that's boring. So I open up the Tesla Robotaxi app because I have access, and I try and jigger the thing. Nope, you're blocked. You can't order it. I said, aha, there's got to be a Waymo hack to do this. Have access. Nope, couldn't order it. Tried to trick it. So I had to go back, and I felt like a dinosaur. I was going back to the Fred Flintstone age. I had to open up the Uber app. It's like, well, that seems too expensive to go into Menlo Park. And I opened up the Lyft. It was $40 cheaper. So that's what I used. And that's how I got there. And I didn't really like it. I'm sorry. I didn't really like it. I missed my autonomy experience there.
You weren't willing to go to the Kiss and Fly lot because that's where you can pick up the Waymo, I thought. This goes back to Grayson not wanting to go too far to get his car. That was the issue.
No, so the Kiss and Fly, you have to be a Waymo employee. And I'm not a Waymo employee, so I don't have access to that.
Oh, really? Okay.
Yes. So I was just trying to trick this thing to be nice to me. That's what I was trying to do. Trick it to be nice. But let's get back to the core point. So you made the point about airports, but it just seems, and listening to the earnings call when I was out in the valley, there wasn't really a lot of talk about autonomy. It seems that lift up the rug, sweep it under. What do you think that was about? Because the conversation to me that I had in the valley with several executives, it comes down to messaging. I don't feel that Uber, in my personal humble opinion, is doing a very good job of messaging their autonomy strategy, because in the SEC filings, they're saying that we're going to own assets. We're going to own the neuro-lucid vehicles. And then when you speak with individuals, they say, no, we're going to be asset light. And then you have other individuals that say something. So it just seems that there's three stories coming from one company, and the messaging is not clear and concise.
Yeah, I think that's probably right. I mean, look, they're obviously making a lot of investments, and they're constantly making announcements with individual autonomy companies that's fragmented and saying they're going to continue to invest in this market. But at the same time, saying like, international is going to be driver out before the US. We're capacity constrained. And, that narrative may struggle a little bit if Tesla actually starts delivering on driver out by the end of the year, which was talked about at the annual meeting again, because clearly Tesla's not going to have the same supply issues that Waymo has. And also, like, if you build that narrative of it being capacity constrained, and then I've talked about this on so many of our podcasts, but we wake up one morning and maybe it's not Toyota or maybe it's not Hyundai or whatever it is, but Waymo identifies another OEM that has credibility that, people are like, oh shit, like here comes, insert OEM here with lots of cars at the same time that Waymo is like, launching market after market with whatever it is, 75, 150, 300 cars. Which keeps that autonomy narrative going.
I'll give you, if you want to call it, if you use the term the oh shit moment, you want to have that holy cow moment. I'll give you a scenario. This is all hypothetical. VW is in secular decline. They have the relationship with Mobileye, but as we've seen historically in automotive, those relationships don't necessarily last forever. What if we wake up one day, Walt, and all suddenly Waymo announces a deal with VW? They've got a massive vehicle. They could deploy this in Europe and the US. And that's one of those, oh shit moments if I'm Uber, because VW is an Uber partner right now with Mobileye. And here's the kicker. They are currently not operating driver out or safety driver out in Austin. So based on everything that you and I know, everything we've experienced, there's a long way for that to go before they can deliver to Uber, which they said in 2027. With the caveat of safety drivers.
The pushback is going to be whatever that announcement is. It's going to take time because these OEMs move slowly in terms of when they actually get that volume. So I think the bigger risk to the at least the current Uber narrative is if Hyundai ramps. So maybe the fact that Uber's talking this up is they have some insight in the fact that Hyundai or Zeekr is not ramping as maybe as quickly as many people expect. Any views there?
It could be. I think Uber's being strategic. I think that perhaps they do know something, and I just think it goes back to messaging, and that they're losing control of the messaging, and they're trying to take it. And I want to set the messaging front here, and I want your opinion on this. It seems that, and this is historical, we're going to go back to the early days of autonomy. I'm saying this for the record. We're in trouble. We need to raise money. Roll out Jensen and Nvidia. Put out a press release. It's historical. You and I know it's been well documented. What do you make of that announcement?
I mean, Jensen kind of stuck his foot in his mouth this week by saying the U.S. is behind China in AI before cleaning it up, and OpenAI had their own foot and mouth moments. But I mean, you're right that the companies bear hug whoever the leader is in the market, in this case, Nvidia. And on the call, Dara talked about putting sensor stacks on existing cars of Uber drivers to gather data for Nvidia, enable what effectively is going to be the competitor, potentially the competitor, to a lot of your autonomous partners. Meaning that, like, if Uber had a partnership with Wave, and Wave obviously is working with Nvidia, but they're also trying to help Nvidia build like a bigger stack that they can take to an OEM, or like it's just kind of an odd situation. And also, like, I kind of question this, meaning that, like, Uber doesn't have that many fleet guys out there. And the ones I've talked to, and other than like taxis in Europe, which I'm not sure you're putting sensors on taxis, maybe you are, but the fleets that are out there, I don't think Uber has talked to them yet about putting sensor stacks on their cars. So, and are you going to do like a onesie twosie thing where like Uber drivers can like pull up to a depot somewhere, like an individual driver, and put a sensor stack in order to collect data for Nvidia? I mean, that seems, I don't know. I don't know. We're gonna have to do more work on understanding exactly how many of these Uber cars will get sensor stacks on them for the purpose of collecting data for Nvidia.
If you're looking at collecting data, and I got to give a shout out to Peter Ludwig over at Applied Intuition, who's given me a really great deep dive on this topic. When you're looking at collecting data, you have to have a range of sensors to get a truly vast data set. You need the LiDAR, you need the radar, you need the camera. One, that's expensive, so who's going to pay for that? Two, that has to be maintained and in some cases calibrated. And three, as we saw when the Dodgers won the World Series, they become a target. So if you're going to take your sensor car, park it on a street in a certain part of the city, you could wake up one morning and you have no LiDAR. Who's going to be responsible for that?
Right. And remember, these are people's personally owned cars that sometimes they use to drive. But again, there's probably a lot of 5-car fleets out there, 10-car fleets. If you're dealing with that on a one-off basis, I mean, I guess, but we'll see.
Before we move on, there's one thing I want to say. Not all data is created equal. Garbage in, garbage out.
Well, I think the data is going to be good, though, if you're drivers. I think it would have to be hooked up to the actual driver to know what they're doing, as opposed to just, I mean, this can't be just like I slap it on there and just get the camera data. They have to be some information from the driver. And by the way, like, if that's a value, this goes back to Tesla, and like Tesla's getting all this data from all of the cars that are out there and people that are using FSD. That just validates the fact that, you know, that is a positive thing to have when you're developing autonomy. What's, you know, you were in the Valley. What is the view in terms of Nvidia these days and what they're trying to accomplish in autonomy?
There's a growing, I don't want to use the word concern, but there's a growing angst around Nvidia. There's a growing angst as it comes to how expensive the chips are, the stranglehold on the market. And you're starting to see, and this is speaking with developers and engineers, the folks that are building it, not the executive decision, but the actual folks building it. They are looking at Qualcomm, kept coming up a lot. The CEO of Qualcomm has been making the rounds talking about their GPU chip. That's getting traction. And the one that really came up, AMD. These certain individuals I spoke to believe within 8 to 12 months, if Nvidia makes a misstep, which I'm not saying they will, AMD could catch them and really start to grow the automotive business. So there's a growing, we want to move away from Nvidia, but at the same time, no. Publicly, we love Jensen, we love Nvidia. But privately, companies are starting to look at ways to move away from Nvidia. It's starting to be, it's not just isolated at one company or 2 or 3 companies. Well, this was a growing trend with all the companies that I met with.
I mean, it makes sense if, and again, we talked about this on, I think, last week and the week before's podcast, if after, Nvidia had their big conference in DC, if you're saying, hey, we're going to sell you compute, but we're also going to provide a software stack to become our own to enable our own autonomous OEMs in the case of Stellantis, then, you're obviously going to look for potential alternatives as you continue to develop your product. And look, I think we've seen this, whether it's sensors, compute, or other things, as companies come out with their new hardware for every new autonomous product, there's always an opportunity for someone to step in and play a new role in a new autonomy stack.
That's a very valid point. I'm wearing the hat. I'm not a very good golfer, but KPMG was very kind to host me at their annual technology M&A conference. One of the themes at the M&A conference that they had was around acquisition. Does Nvidia make a move? Does one of the well-balanced licensing AV companies make a move? And the executives from KMG are seeing consolidation coming. So there is that potential consolidation. And if Nvidia does consolidate and purchase somebody, that impact on the market that you and I have discussed is going to be pretty significant there.
What else did you learn when you were in this lovely trip to the West Coast?
I think the most important thing that I learned outside of the Nvidia and all the deal flow that is coming was the time that I spent with Kasser and Peter over at Applied Intuition. Yeah, they're both the co-founders, and they were very kind to put me in the Applied Intuition SDS vehicle. And I got to say, Walt, I came away impressed. I've said this many times. I'm going to say this again for the record. I believe Applied Intuition is the most important company in autonomy, and there's big things coming. The vehicle performed exceptionally well, highway speeds, urban environments. This thing scales. They become a very, very big player, not just on the software side for the tools, but in the driving side as well.
But what is this vehicle? Who are they developing it for? Where will we see it? Is it privately owned? Is it going to be part of a robo fleet? Like who is the car partner, the OEM partner?
Applied Intuition has 18 of the 20 largest auto manufacturers around the world as partners. So you can if you want to put your Cousteau hat on and use your imagination, you can see that go. And the important part to point out that stack is not just for on-road driving for robotaxis. It's also for 18-wheeler Class 8 trucks. It's also for off-road mining. And oh, by the way, if you don't think they're done yet, they did an autonomous fighter jet that beat a Top Gun pilot in a fighter fight.
But where's the first time that I can pay for a ride or buy a car that's powered by Applied Intuition?
My intuition says, and that's my intuition, not Applied Intuitions, but my intuition, you will see 27 to 28. In some form of some major OEM. That's pure speculation on my part, 27 to 28. Whether that goes into a robotaxi or personally owned, unsure, but 27 to 28 is when you'll truly, I believe that you will see it out there and you'll be able to experience it. But Walt, you know me and I know you, so I think you're going to get a little early ride.
So is this like a Mobileye type of situation where they're working directly with the OEMs to enable the OEMs to deliver autonomy in their cars? And that sounds like more of a private ownership path than anything.
I think if you look at it from an SDS standpoint, think of it as a Neuro wave where they're going to license the stack. But they also do all the tooling, the supplies, they do the in-vehicle software. So think of it as an add-on. So if you have a box of Legos, so you're just adding on another Lego. They're basically building the complete software-defined vehicle, and now they're also building an autonomous driving feature to plug into it.
We'll have to keep an eye on them. Let's move on to the Tesla annual meeting. It's always fascinating when you see a group of very fervent investors gather together. And if Elon gets up on stage, he got his, as everyone knows, had his pay package approved. So obviously should be no bumps in the road in terms of the focus and the development in that company. He showed the Cybercab. So your mixed prediction in terms of the couple hundred cars that we were expecting in Austin by the middle of next year, including some Cybercab, looks like it kind of is on track. They once again talked about taking the safety riders out of Austin. I think that's going to be a massive catalyst for the company and for the industry in terms of how they're perceived. And I think, they've talked about states where they're going to have autonomy after Austin and the Bay Area. And they listed them in the cities now: Vegas, Phoenix, Dallas, Houston, and Miami. Miami close to you. None of them obviously a surprise based on the states that are mentioned, but obviously getting more specific and more granularity around this. Were you able, they claim to be in the Bay Area. What was your Robotaxi experience like if you had one in the Bay Area? You already told us about the airport, but did you ever get in one?
Not good, is what I'll say. Not good. They are supply constrained. I'm at the hotel and I was like, oh, okay, I'm going to see a friend for dinner, so I'll order the Robotaxi. I open it up and it's like, okay, I'm gonna be prepared 15 minutes. It's new. 28-minute wait. I said, holy cow, no way. I said, okay, well, yeah, sure, okay, I'll tell my friend I'll be 15 minutes late. I'll wait. Well, then I look at it. It won't pick me up at the hotel, Walt. It wants me to, and I'm on Sand Hill Road. It wants me to walk across the street to go to the Kleiner Perkins office to get picked up. I said, what happens when the chicken crosses the road? I said, I don't want to end up flattened. And then I tweeted at Elon. I said, what's going on? No response, but got some interesting feedback from folks. So massively long wait times, unusual pickup and drop off spots, and it just wasn't functioning right for me. It just didn't make any sense to use it.
I mean, in this case, the supply constraint is more of supply of humans constrained because, they're putting a human in the driver's seat as an observer, for those cars. So that's obviously the reason. So they need to get to the point where the technology gets to where they can take the driver out. And, still a lot of words around this, timelines that are coming up in, less than 60 days now in Austin. More commentary at this annual meeting about unsupervised FSD. You're now on 14.1.3. Elon mentioned at this meeting that when you get to 14.3, right? So it would be 14.2 something. When we get to 14.3, presumably at some point next year, that they would allow texting and driving. I think he talked about falling asleep in the car, stuff like that. So still talking a lot about the progress, but until you can obviously take those attendants out, supply is meaningless because, you'd have to supply humans. And the whole point of autonomy is not to have the humans. So I think that obviously colors your experience in California. So to expand California to larger markets is kind of silly for Tesla if you have to rely on humans to actually continue to drive those cars.
And you have to be able to pick up where you're located. If you're within the ODD, how could you not pick up at a major hotel in the Valley? And you want to know an interesting thing about the hotel? Speaking with the valet guys, the Waymos come in there, no driver, and Waymos have a cone issue at the hotel where you have on the one side, you have if you're a guest getting ready to check in, then you have the Uber Lyft on this side. The Waymos struggle looking at the cones. It's fascinating. So there's still a cone issue there.
Let's assume that it actually does get delivered. And he says you can do it. What is Duffy going to say? How is the regulation and insurance going to work? If, I'm sure my car is covered by my own insurance, and Elon says, hey, I can start texting and driving, with 14.3, what's my insurance company going to say about that? And what's my regulator? What are my regulators going to say about that?
It's going to open a can of worms. Because if the way that the law is written today, I want to clarify that, written today, if you have the ability to take over a motor vehicle, technical term there for you, you are responsible. Whether there's pedals, there's a steering wheel. So 14.3, you said I could fall. Elon said I could fall asleep, not Walt. But see, Walt's a good driver. He says, no, you got to pay attention.
First of all, I don't want to misquote. I know that he said allow texting and driving within a couple of months. I don't know if it was there. At one point during this presentation, he did say you can take a nap while the car drives, but I might be confusing the two things. Either way, texting and driving is just as bad from an insurance company standpoint. So let's assume they say that with 14.3.
Okay, so hypothetically, let's just say hypothetically, because we don't have the record here, that you can nap in the vehicle. You're still responsible in the if something happens. Another thing is, if you're drunk, you're high, or you're intoxicated, that's a DUI. So where does that liability fall? Because and I know, those people are going to call it their drunk mobile. This is really great. I can get home safely from the bar. So watch that. As you watch those things, the other element to watch that I watch very, very closely, what states does Tesla get licensed to sell Tesla insurance? And this week, the big news, Tesla now has the legal authority to sell insurance in the state of California, and they open that market. That is a massive insurance market, a massive breakthrough. So watch that as they start to expand this service.
Aside from getting this insurance thing in California you talked about, the other big one is, if they get FSD approval in China, which I think there was some expectation delivered at this annual meeting, of accomplishing that within a couple of months.
It's clear, we've covered it, FSD is scaling. And in order for FSD to scale, Tesla continues to focus on cost cutting. We saw it with the AI5 announcement for the chip. 90% less than Nvidia Blackwell. That goes back to the conversation I was having in the Valley. So this is hypothetical. If you put the AI5 chip in, you put the camera set, what do you, Walt? $300 a vehicle? $400 a vehicle for a full self-driving kit? Could you know the pressure that's going to put on global OEMs and global robotaxis to get costs down?
I mean, they've talked a lot about cost, which is great, and these very low cents per mile in terms of how to run it. But as always, let's just get the technology to work first, first and foremost, and all that stuff will follow. What was interesting, and this is not the first time it's been said, but I think it's interesting in the context of Uber has talked about, hey, if we want our drivers to be happier, we want to try and give them other monetization opportunities. There's this concept of multi-gig, meaning I'm sitting in my car and I've got digital tasks that I can do in order to get paid. I don't think they want to go and do TaskRabbit type of stuff. They want the guy in the car, available to them as supply and maybe earning money. Tesla's spin on this is, hey, we're going to have this compute in all of these Teslas. We're going to earn you money. If you plug your Tesla, out into the Robotaxi fleet, you make money. If it's sitting in your garage and connected to whatever, then you're going to access that inference that's available in each of these cars as a revenue generating opportunity. So if the end game here in lowering the cost of rideshare is finding how to monetize the vehicle the best way possible, then when you actually own the compute in the car, that probably is maybe more attractive than giving someone a digital task to do on their phone when they're sitting there waiting for their next ride.
Correct, because at some point, the vehicles, the Teslas, FSD will be unsupervised. They'll be out there in a fleet. And then you don't have the growing trend that Uber and Lyft are facing. No tips, no trips. And if you go through some of this rideshare stuff, I don't want to be an AI data labeler. Well, with the Tesla, you put it into the network or you plug it in, you're not doing all that. So it's a very valid point. It's a diverging strategies. And I'm just going to vote that people much rather plug it in and get paid than have to data label.
Than actually plug in and have their car do the work and then do the work themselves. Imagine that. You're really going on a limb on that one. Grayson, it's time for the Foreign Autonomy Desk. What do you have for us this week?
The Japanese government is leaning in once again to autonomy despite the regulatory environment there. They're looking to deploy 10,000 SAE Level 4 autonomous trucks, buses, and vehicles by 2030 to deal with the growing driver shortage and the aging population.
Grayson, do we have anything to say about Uber? Because I know, again, they talked in the autonomy world, they expect those markets. It seems like there's leaning into international more than America, saying that they're going to be driver out there first. What's going on with Uber in Europe?
Uber's leaning into Europe in a big way. I'll go on here. It's Autonomy Markets. I'll make a prediction. We're not Polymarket, but I'll make a prediction here. Europe will become Uber's largest autonomy market. DAR is leaning into it, messaging on social, the chatter that's brewing is they're all leaning in there. We're continuing to get statements around their growing partnerships there in the EU.
We have Baidu doing 250,000 fully autonomous robotaxi rides a week. Not sure what that means, what those individual markets are, but certainly Baidu's out there as an autonomy player.
They are. We need details. We need details. We need details. We need details.
Good luck with that. By the way, you had WeRide and Pony, launch on the Hong Kong exchange. Markets haven't exactly been strong, but it hasn't been a great debut for them in their flight away to the Hong Kong markets.
No, it hasn't, but we're going to continue to watch it. I think that it's a strategic hedge in case of the regulatory environment here in the United States. And staying on the foreign theme, we had filings from Waymo in Canada. They've hired lobbyists looking at Ontario and looking at British Columbia. So I'll go on the record here and I'll say it's probably going to be Vancouver, Toronto. Also spoke to an individual in Quebec. He said, don't rule out Montreal. And also they hired lobbyists down under in Sydney. And we're starting to see comments from the Australian government of wanting Waymo. So perhaps Canada and Australia are the next international markets for Waymo.
No offense to Canada, but how about you just allocate more cars to some of our U.S. markets before expanding up north.
Waymo is going to have to figure out their car issue, and we're going to be here each and every week to ask about the supply constraint issues. Sundar, sir, Walt and I are to be honored, sir, to have you on Autonomy Markets to discuss Waymo. So that's an open invitation, sir, to come on here and discuss it. And yes, we will ask you about vehicle constraint. And me being me, I'll ask you about quantum computing and all the breakthroughs at Gemini. That's my pitch, Walt, to have Sundar on here on the pod. But what do we need to look for on the Autonomy Markets over the coming week?
For me, just another big week in earnings. You have Kodiak, first quarter, I think, since getting their SPAC approved, Serve, which we spend time with, Instacart, which, do have some autonomy element to what they can accomplish. And, smaller company, but interesting, Luminar, CFO leaves. Like, there's a lot of stuff going on at Luminar. So we'll see what they have to say on Thursday, I think.
I'm just going to go on a limb here. I think the Luminar call could potentially be the most interesting earnings call next week. The future is bright. The future is autonomous. The future is ownership. Walt, until next week.